What if I told you the economic pain you're feeling right now is not an accident? What if the layoffs at Amazon, Google, and across Main Street, the housing market freeze, the credit debt crisis, what if it's all happening by design? Now, I'm not talking conspiracy theories. I'm talking cold, hard financial strategy. In the next 7 minutes, I'm going to show you why powerful people might actually want a recession right now and how they're making it happen. By the end of this video, you'll understand why your financial future is caught in a high-stakes game between the White House and the Federal Reserve, and the biggest debt crisis America has ever faced. If you work in real estate, own a business, or just want to protect your family's finances, you need to understand what's really happening. So let's dive right in. Here's something they're not talking about on the news. The U.S. government needs to refinance $7 trillion in debt by the end of this year, 2025. Let me put that in perspective. That's about $20,000 for every man, woman, and child in America just to refinance the existing debt. But here's the problem. Most of this debt was borrowed when interest rates were super low, like 1% to 2%. Now, rates are at 4.5% to 5%. So when the government needs to refinance all this debt, their interest payments will explode. Think about it like this. It's like if you had a $300,000 mortgage at 2% interest, your payment might be around $1,100 a month. But if rates jump to 5%, that same mortgage would cost you about $1,600 a month. Now, scale that up to $7 trillion. This is a financial nightmare for the government. The interest alone would eat up the money needed for everything from Social Security to the military. But what if there was a way out? What if someone decided to deliberately tank the economy to solve this problem? Wait, what am I talking about? Let me explain. When a recession hits, what does the Federal Reserve do? They cut interest rates to stimulate the economy. So if you wanted lower interest rates to refinance all that debt, well, you might actually want a recession to happen, and to happen quickly. But how would you make that happen? Let's look at what's been happening since January. First, we saw the Department of Government Efficiency, DOGE, yes, that's really what they call it, DOGE, quietly supporting massive layoffs across major industries. They've been praising efficiency measures that have put thousands of Americans out of work. Just this month, we've seen cuts at the Department of Education, the dismantling of climate programs, and hiring freezes across government agencies. Meanwhile, the administration has been putting pressure on businesses to trim the fat before the next economic cycle. Even Intel has announced 40% layoffs coming this year. Is your company cutting back? Are you seeing layoffs? Drop a comment below because I really want to know. The unemployment rate just hit 4.2% in March. That might not sound high, but economists watch something called the Sahm Rule, S-A-H-M. The Sahm Rule goes like this. When unemployment rises 0.5% from its low point, we're almost already certainly in a recession. We're right at that threshold right now. But here's where it gets interesting. The financial markets are now pricing in 4 to 5 interest rate cuts by the end of 2025. Wall Street is betting on a recession, and when the recession hits, the Fed will have to slash rates. Then what happens? The government gets to refinance that $7 trillion at a much lower rate. But wait, who benefits from this strategy? Think about the political calendar. The new administration needs to blame economic problems on the previous administration, and rightly so. They need a recession to hit right now, not later. If they can't get through the pain early and force the Fed to cut rates, then they might see an economic rebound by late 2025 or early 2026, just in time to claim the credit for the fixing the economy. It's like a controlled demolition. Break it now, rebuild it later, and win the narrative. What do you think? Is this a $7 trillion debt problem big enough to justify this kind of strategy? Let me know in the comments. I really want to hear your opinions. So, what does this mean for you? Well, if I'm right, here's what to expect. For real estate, in the short term, pain. Higher unemployment means foreclosures and distressed sales. But when the Fed cuts rates, you're going to see mortgage rates drop. If you can hold on to your properties through this recession, you're going to be positioned for the next boom when rates fall. For investors, volatile markets ahead. The stock market hates uncertainty, but it loves Fed rate cuts. we're going to see a sharp drop followed by a strong rally when the Fed starts cutting. For business owners, tough decisions are coming, guys. Credit's going to get tighter before it gets better. Focus on cash reserves and cutting unnecessary expenses right now. For everyday Americans like you and me, you need to budget for harder times, but be ready to take advantage when rates fall. If you've been priced out of buying your home, well, your opportunity might just be coming up. Look, I'm not saying this recession strategy is good or bad. I'm saying it might be happening. And if it is, those who understand the game can position themselves to survive the crash and thrive in the recovery. But here's the million-dollar question. Is engineering a recession to solve a debt problem ethical? Is it right to cause millions of Americans pain to fix a problem created by government spending? This is not the first time economic pain has been deliberately caused. In the early 80s, Fed Chairman Paul Volcker intentionally triggered a recession to break the back of inflation, and it worked, but millions lost their jobs and some lost their homes. The difference today is we're not fighting inflation. We're trying to manage an impossible debt situation. Here's what most people don't realize. The national debt has grown so large that there are really only 4 ways out. 1, grow the economy faster than the debt. That's nearly impossible. 2, default. This is catastrophic. 3, massive spending cuts. That's politically difficult, as you're seeing all across the news. Financially engineering, manipulate the system to make the debt manageable. It looks like we're going to go for option 4. Create a recession, force rate cuts, refinance at lower rates. But there's a risk. What if the recession gets out of hand? What if it turns into something worse, a financial crisis or a depression? This strategy is like performing heart surgery on the economy. It might work, or the patient might die on the table. And who pays if it goes wrong? Not the politicians, not the bureaucrats. It's regular Americans like you and me. So what should you do? First, build your cash reserves. Recessions create opportunities for those with capital and the brainpower to move forward. Second, look for assets that perform well when interest rates fall. Certain types of real estate, bonds, and even some stocks. 3, stay informed. Understanding what's happening gives you power. The 2025 recession might be engineered, but that doesn't mean you have to become a victim of it. Economic cycles are like weather patterns. You can't stop the storm, but you can prepare for it and even use it to your advantage. Here's what keeps me up at night. If powerful people are willing to engineer economic pain to solve technical financial problems, what else might they be willing to do? Now, I want to hear from you. Is debt refinancing strategy brilliant economic management or dangerous political manipulation? Is it strategic brilliance or political sabotage? Drop your comments below. And if you found this analysis helpful, please hit that subscribe button and send it to somebody that you know that needs to hear this. We're going to be tracking the situation pretty closely in the coming months. Until next time, stay smart, stay prepared, and don't be a pawn in someone else's game.